Okay, welcome back to our channel, MegaWhale team. Thanks for tuning into another video. And Bitcoin is being quite explosive in the last few hours. We're going to be talking about a lot of things today. It's going to be quite a long video. We're going to be going over short-term analysis, long-term analysis, our macro targets, what we need to do to be bullish again, and will this trend continue downwards. We're also going to be talking about the recent FOMC minutes meeting and the result of that in regards to interest basis points. And we're going to be going over a thread I did on Twitter about how this will actually impact you as an individual who maybe potentially has a long-term loan, a mortgage, repayments on something, and how that's going to actually impact you and impact the economy. So a big video today. We're going to get stuck right into it. Before we get started, remember to head over to the link in the description. You can find access to our Twitter, our Telegram. If you want VIP access, you can join our VIP link. That's going to be providing you with VIP trading signals, exclusive market updates, 24/7 direct message contact with myself, and much more. We also have our Crypto Academy course, which is a 10-week Become a Trader course launching pretty soon. We haven't given an initial launch date for that, but if you're interested, you can join the link down below for more information. With that being said, we're going to dive right into the video, and we're going to start with the thread on Twitter. So, this is what I posted on Twitter. I'm not going to read through a whole thing, but you can go through it and read through it yourself. I think it's a really important read, and it could give you some perspective or insight on the recent crash and more or less also the potential future moves for the market, including the cryptocurrency market as an on-risk asset. We talked a little bit about this in the previous, I think 2 or 3 days ago, how the interest rates rising will impact Bitcoin. So this is more of an extension on that video. We're talking more about how the interest rates rising will impact banks, and then how the banks will then have to increase these rates, and then how that's going to affect you. So I'm not going to go through a whole thing. We're going to scroll down to the last few slides, last few points, and we'll talk a little bit about this. So basically, what does it mean? We talked a little bit how Biden is actually increasing expenditure and has been printing more and more money instead of actually reducing expenditure in the annual budget to reduce the impacts of inflation. They're actually not really caring. It doesn't seem like their actions meet what they're trying to do. But it forces the banks into this weird position, because now banks they're forced to increase their long-term loans, the interest rates on their long-term loans, to keep their net profitability high, because they can't adjust their interest repayments on their short-term borrows from their debtors. So the banks, if you don't know, they borrow on the short term and basically loan that money out to you on the long term. So they can't adjust that repayment rate on their short-term borrowed money. When interest rates rise, they have to pay more money back. And of course, if they're not increasing their interest rates on the money they're loaning out, it becomes a scenario where there's this net profitability decrease, and they can't allow that. So what does it mean for you? So I said, with the result in a scenario where cost of goods and services continue to rise, which will be a result for the increased inflation and increased economic, obviously money printing and spending. It obviously not going to be enough to counteract the rising inflation, these small basis point increases. So the banks are now going to be forced to raise long-term loans, like I said over here. And this massively increases the cost of living and decreases average household available expenditure, weakening the economy and potentially leading to stagflation, guys. So this is very, very bad for risk on assets or on-risk assets, for stocks, commodities, equities, for cryptocurrency, for real estate. We talked about all of this in the previous video. If you want to find out more about that, go check it out. But it does explain a lot about the recent price action. People are preparing for the crash. They are aware the 50 basis point hike is incoming, and they are preparing for it. And we can see that because they're selling off their risk assets. We take a look at cryptocurrency, we've seen a huge drop. We take a look at traditional stock markets, we've seen a huge drop. This is consistent across the board, and we talked all about this. So if you want to find about all of this information, go watch our previous video, and it explains it in a lot more detail, and it explains exactly how interest rates actually affect risk assets and why they affect risk assets deeper than just interest rates rising. All right, guys, so let's dive right in. Bitcoin is in an ascending channel formation. We're not going to talk bullish scenario. We've already said bullish scenario, we need to break 48K. This entire period here, we were not bullish. All right, we are short-term bullish, meaning that we were aware the price is going to move upwards. In fact, if you remember, we gave a prediction of a 35K bottom. When we lost this level here, See the support line? I can't draw a pen, this support line here. When we lost the support line of 60K, we said, guys, we are heading to $35,000, right? We went a little bit lower, but we head to $35,000, found a nice base of support. At 35K, we were consistent with our saying, we've been telling you guys 22K to 26K is our long-term bearish target for now, all right? We're gonna discuss that a little bit more in this video, and we actually might do some adjustments on that in this video due to the recent information we have, the interest rates. Anyway, we got that correct, all right? Everyone was bullish this entire way down. We were bearish, we were correct. From 35K bottom, we said, you know, we are aware of this bottom over here. It's going to happen, but we are going to find some sort of relief, some sort of bounce. And we said that 47K will probably be our top. We said we could potentially reach 48K, but I don't think we'll break over, because if we break over 48K, we crossed that 100-day, we crossed that 200-day moving average on the 1 day. What does that mean? It means the trend reverses, or it means we're in a macro bull market again, but it's not going to happen. We said it's not going to happen. Very unlikely. And it could still happen, but it's very unlikely. It does need to cross that 48K. We were telling people, you know, 47K, whatever. People are bullish, people are overly bullish. And once again, the majority was incredibly bullish within this upper band range of the ascending channel. This is where the Twitter followers, Twitter accounts, blah, 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 all screaming bullish, all screaming bullish. We were still aware not to be bullish until 48K. So if you've been listening to our channel, you've been following the objective analysis, you would have been correct. You'd be in an amazing position right now, not holding any coins, just in USDT, trading on the way up, taking profits, but not overextending and not letting FOMO get into you. The market's dropped. We are an ascending channel, and we're going to do a few analyses on this today, starting with some macro pattern analysis and then moving down into technical indicator and data analysis. To start with our macro pattern analysis, we do know an ascending channel is a bearish structure. We have a flagpole into the channel, moving upwards, at least 3 retests on one side, 2 on the other, and then we drop down. The distance between the base of the flagpole and the apex, base of the flagpole up here, apex of the flagpole, is the distance between the final highest point of the impulse between the ascending resistance and support, and then the low coming off that from the decrease in the downwards flagpole. All right, so what we can do here, we can take a measured move from the apex into the low, all right, into the low, copy and paste that distance, and we can attach that into the high, and that will drag us down into the low. All right, and it takes us down to around $13,000. So I got that green line there, I put it a few days ago. It takes us a little bit low actually, to around $13,000, 12,000 or something, which is actually in fact touching support on the top of these points here, which actually was resistance for the bull market. If you remember, this whole horizontal line here was bull market resistance or bear market resistance. When we crossed this line and flipped it finally, that is when we went into a bull market again. All right, and this line, if I put on a log scale, which I'm not going to do, holds consistent with that midline between that absolute bear market bottom and then that line that goes directly through a middle, which indicates where the bull market is. So this is the worst case scenario. All right, we're going to give you worst case scenario first. This is absolute worst case scenario. I do not think Bitcoin will ever go below $12,000 again. Even if we crash down, whatever the hell happens, price not going to look like that, but it comes down, I don't think it will ever go below $12,000. I think that's where the fan value is. I think that's where it's going to bottom out at the lowest. My personal prediction is 22,000 to 26,000. Now, what we're going to do, we're going to show you exactly why I believe that is where I think Bitcoin will bottom out. So I'm actually going to bring up the Brave New Coin Liquid Index real quickly, and we're just going to quickly, I didn't have this one prepared, so I'm going to quickly adjust it to the weekly chart, and we can see exactly why I believe this will be the bottom. And I do like to bring on a log scale, and my original prediction was the 1st to the 14th of July, so we'll chuck it on the 14th of July, where I think the bottom will be. I do think that may be extended now. I think the price action has to drop down a lot before then. But anywhere after that period is where I think the price will bottom out at. And what we can do is we can take a distance and height analysis, taking the distance between that 18th of July, 107 days, applying a 107-day distance to the 200-day moving average. So what we do, we can take a 107-day distance. All right, now we're going to copy and paste this, assuming that it's going to rise and go over rise over run on the same trajectory. And then what we can do is we can take a line and just do a linear analysis, drag it across, and just assume that is where the bottom's going to be. If we take the price and bring it down to this point, it's going to land directly at $24,000, smack bang in the middle of my prediction, 22,000 to 26,000, guys. All right, so that is how I came across that prediction. We've been telling you guys about this since 60K. All right, we were the first person or channel to talk about the 200-day moving average before Benjamin Kong, before a lot of big channels, and we're holding true to that. We think that's a real possibility because in history we have always retested that 200-day moving average. We're not going to go over it any more than that. You've probably heard about it 100 times on the channels banner, but there is the truth. Let's go back to Bitcoin chart. So back to our Bitcoin chart, what we can see, let's just take it off log. Let's take it off the 7-day. Let's go back to the daily. Let's take a look at the short-term analysis. So from here, I think two things are going to happen. Now, I posted this scenario on Twitter. I'm not going to show you the chart. Let's bring up the chart again on Twitter. And we said this was our scenario. And if we can look at my cursor, the second line here, it bounced up to retest that resistance and it crashed down to around 42-ish, a little bit higher than 42, about 42,700, get a small little bounce and then a drop down. What are we seeing? We're pretty much seeing that exact thing play out. All right, if we go to a 12-hour chart, we can see we bounced here. All right, we had our squiggly line up, rejection at resistance, drop down, 22,700. I kid you not, that is exactly where it came to. A little bounce, all right, little bounce, and then we continue downwards. All right, it is exactly as we predicted. It is going exactly as planned. And remember, guys, we're going to show you that smaller time frame now. Let's go to do some more data analysis. So let's bring up the RSI. For those of you who didn't see my post on Twitter, and who didn't watch the video yesterday, actually, we're going to show you how we predicted this. And in the video yesterday, we talked about this in the video quite extensively and how this can be predicting the next move in Bitcoin. And we saw a rising channel here on Bitcoin. Of course, a rising channel requires 2 upper resistance retests and 3 lower support retests to confirm it is in fact a rising channel. A rising channel is a very, very bearish structure. They break down majority of the time, and when they break down pretty strong. The distance between the breakdown, we can do a measured move. So it is the top of the apex, all right, directly down to touch that bottom ascending trend line. If we copy and paste that across and apply our breakout distance, this is where we expect the price to come down to on the RSI 33.32. Where will that equate to on the Bitcoin chart? It will bring us back down potentially the lowest $39,000 to $36.5 thousand. And we talked about this yesterday's video. We said a crash down into this range, potential bounce, or we continue down to here. All right, guys, all of the stuff we talked about is backed by data. We've shown you it time and time again. This isn't new information. If you've been staying up to date with the channel and you've been listening to me, everything that has occurred here should not be alarming. It shouldn't be new. We are just following the market. We are following the plan. We are aware of all scenarios. We're not bullish, we're not bearish. We don't care about that. We don't care about titles. We simply follow the market. All right, I will always give you guys the most objective, unbiased analysis. We'll always look at the data and never let emotions determine our predictions or decisions. All right, it is a skill to not let that happen. It takes time, but if you practice, you'll definitely get there. All right, guys, so stick with it, keep trading, and you can only improve. So let's talk about the analysis on the technicals. We've gone over our macro structures. We've gone over where we think the price could go. Let's talk about the technical analysis. Well, of course, we've rejected off the 200-day moving average. Very, very bearish. Now, for those of you who think this is still a bullish pattern, all we need to do, I'm going to go back to Twitter because I post a lot of stuff on Twitter, is we need to take a look at this. We just invert the chart. As soon as you invert the chart, it eliminates your emotional bias. If you have any emotional bias based on where you think the price will go, inverting the chart will always eliminate it because it will show you the pure market structure. Remember, as per Dow theory, all right, if you don't know who that is, do yourself a favor, research it. Markets will always tend to move in historical price patterns, all right? These patterns are relative and they're incredibly consistent, all right? They have obviously not 100% accuracy, but they have a higher degree of accuracy than you'll ever be able to predict just trading based on emotions and feelings. All right. So this indicated we're in fact in a descending channel known as a bear flag. All right. On this ascending channel, all right, a negative descending channel. So an ascending channel, which means we break downwards. A lot of people didn't even look at this. They didn't care. They think for some reason this time's going to be different. We're an ascending channel with still a bearish pattern, but somehow this time's going to be different. It's not the case. Okay, ascending channels have a very, very low failure rate, meaning that a failure rate would mean when the price comes in and doesn't break down, but instead breaks upwards. A very, very low failure rate. It doesn't happen often. It'd be less probable to assume we break upwards. And that is the main reason why we haven't been bullish, because it is less probable to assume a break upwards than a continuation downwards. Let's bring up some of our stuff, right? Bull market support band. Lost the bull market support band on daily. Very bearish. Gaussian channel. Entering the Gaussian channel again. Remember, last time we entered the Gaussian channel, we can either come down below the Gaussian channel or fall through it. I believe we will come back down to the bottom of the Gaussian channel. I think from this perspective here, we may be able to look at the market from a more optimistic perspective again and potentially see a new trend form, and even maybe we might even continue upwards from there. But the immediate short term is downwards. Our long-term prediction is still valid. If we do, however, bounce from here, I do want to show you one potentially bullish chart. Now I'm going to bring up a whole new tab for this one, a whole new chart. We'll go to Bitcoin USDT on, let's go Coinbase. So I've got no drawings or anything in here so far, besides obviously these indicators, and obviously this guy's being a clown telling us to buy at the very top, like nothing out of the abnormal there. Is this chart going to load? Let's take a look. I don't think it's loading. All right, we'll go back to our normal chart. So essentially what we have here, if we zoom out, we do have a potential, what you would call a rising channel or some kind of horizontal channel across over here. So it does indicate that we could potentially find a bottom along here again and then bounce upwards only to get rejected again. All right, then our target will be in play. This is another scenario that I do have in the back of my mind. I don't necessarily think it will happen, and I definitely think it is way, way, way too soon to be predicting something like that, and definitely way too soon to be investing based off something like that, because even if that does occur, we do still have a significant drop here to withhold, which is a 15% move potentially and 10% minimum for Bitcoin before anything like that happens. All right. So like I said, to wrap it up, 48K breakover, bullish until then, very much bearish, very much in a downtrend, very much remain cautious. The technicals are not looking amazing. We've talked about the RSI already. We looked at the Gaussian channel indicating a break to a downside. We had a look at the bull market support band, losing that bull market support band. We're not even going to bring up the MACD. We already know the MACD is crossing downwards. We already know we're rejecting off moving day averages. There's not much more to go over, guys. All right, if you enjoyed the video, remember like, comment, and subscribe. If you want more of this objective analysis, remember follow us on YouTube. We haven't been here around long, but we've been in the trading game, particularly on Telegram and Twitter for a while now. I've been trading for over 7 years, so we got a lot of experience in this market. If you have any questions, leave them down below. And if you're considering joining VIP to get objective analysis, daily trade signals, high profit, and direct access to contacting me on a daily basis to help you through your trading career, click the link in the description. It'll be the best decision you have ever made. All right, we'll catch you in the next video, guys.